Okay, very good afternoon here on the 25th of May 2018. My name is Rishi Patel, co-founder of Master of the Markets, the Elite Traders Conference, and the Traders Open Day. Very warm welcome into this Forex Friday, which has now been renamed actually to the Market Roundup, weekly Market Roundup. So we're really looking forward, of course, to engaging with you all this week, reporting on our performance. As you know, we do so every single week without fail. We always talk about the weekly performance, regardless of whether it's a profit or a loss over here, because we have that level of transparency here at Master the Markets in both the live trading room and the Vedanta Elite trading room as well. So let's go ahead and get into the update. Let's start by looking at the trades that were taken in the Vedanta Master the Markets live trade mentorship, live trade mentorship advanced rooms, which of course we call the live trading room standard. So live trading room standard, you can see first of all on the lift-off strategy, we did have a trade here that triggered on the Aussie dollar. And the trade that's on the Aussie dollar, of course, you can see is 23rd of the 5th. It triggered earlier this week. We're out on the 25th of May 2018. And a 0.5% loss on that. So we just capped the downside on that loss. It was a lift-off setup here really on the Aussie dollar. Let's take a look at it on the screen just here. You can see it has clipped us just here on the Rev Primary, which is of course this bar here. It did clip us out of the trade, and you can see that then it did of course proceed your lower. So we're a little bit unlucky on that side, but that's okay. I mean, it's the nature of what we do, and that's absolutely fine. Let's look into, of course, how we'll refine the trading stop loss on that to account for those opportunities just there. So Aussie dollar, we were out for a 0.5%. And then the money bars, we had a trade on the Euro US dollar, which was a potential swing bar, potential turning point in the market. It didn't pan out for us. And so again, look, a 1% loss was made on that one as well. Let's quickly have a look at that trade opportunity just there. So here is the potential swing bar, and you can see we were triggered into the market on this bar here, the primary, and then the following day, of course, it did just move against us. So it was unlucky on that one just there. That is now on the Eurodollar. That is the third failed primary along. The next time we get a primary, we already know that statistically it's an 85% chance that it will convert. So let's take this from there on that Euro US dollar. We will continue looking at more opportunities, new potential swing bars to form in the market. Just there. So that's pretty much it for the live trading. So we're down 1.5% this week total. Just giving back some of the upside, the huge upside that we were enjoying, of course, in April, and that's natural that should happen at this stage as well. Take a look at what we've got. So you can see, I'm just reporting on the cash side of things just here. You can see that Liftoff has performed very slowly this year, only a 0.16% up. You can see money bars has given back some of that return that it's made there. On the cash side, let's go ahead and let's go ahead and update that on money bars. So that's given back 1%, but you can see how it's been performing for the beginning part of the year. So we absolutely expect that to happen, and that's okay. And then let's go over, of course, onto the Vedanta Elite room. So remember, we have here not only the live membership advanced trading room, but we of course also have the Vedanta Elite set of trading strategies as well, which we are looking at how they are performing just there. So the Vedanta Elite set of trading strategies, let's go ahead and open up the journal. You can see just there, and we have a couple of trades here. So the first one we did close out earlier this week. We actually opened this particular trade. Back on the 18th, which is last week, but it closed out this week, which is the 21st on Monday on the Aussie dollar. And of course, the prime profit on the Aussie dollar didn't yield a profit, so we had a loss there of 1%. And in addition to that, two other trades that we took this week as well on the swing profit system. I can show you those ones just there as well. So Euro US dollar and GBP USD as well. You can see that both of those are out for net loss as well of 2%. So overall on the Vedanta Elite Trading Room, we were down 3% for the week, and the live trading room 1.5% for the week as well, just there. So that is an update in terms of how our positions have fared and what we were looking for to happen on the market this week. Let's go over to the topic of the day, and that is, of course, all around Fibonacci. So getting this question quite a bit in coaching, in one-to-one coaching that I'm doing. So I want to cover Fibonacci in a little bit of depth. First of all, the meaning of Fibonacci is it's related back to a mathematical series of numbers. And in the market, Fibonacci levels are used to determine retracements, or I like to think of it as price discounting. I'll give you a good example just here. If you have, for example, a market that is trending upwards just here, for example, just here, and we have this upward trend, if we wanted to understand Fibonacci, we would draw from swing low to swing high. And so you can see the market here has pulled back to the 50% level. So I would call this a 50% discount on where the price has actually come back to. And this would be a good potential opportunity to get involved in a trade and obviously take a trade long. Now, why am I drawing the Fibonacci from this point to this point? See, because this is actually the last two confirmed swings that I have on the chart. This is the other thing as well, specifically with Fibonacci. If you do not have a mechanism for Fibonacci to be able to actually trade the market in a consistent way, to be able to determine swing highs and swing lows in a consistent way, in the way that the smart money indicator does, it's going to be very difficult for you to be able to be consistent with this as a methodology. So if you look, I have drawn my levels from the last confirmed swing low all the way through to the last confirmed swing high. So that's what I have done just there on that Euro US dollar. And you can see that the market is in an upward trend, and you can see the retracement that it comes back to is at the 50% level. Because the market is in an upward trend, I've drawn the Fibonacci from the lowest point to the highest point. Now, how would the same thing fare on a downward trend? Well, let's look at an example of a downward trend. And there is a good example, in fact, just here. And we'll use this example because this is actually the last opportunity that we actually took on the Euro US dollar in order to be able to take the PSWB short, the money bars trade short. And we actually took a trade where we actually entered the market on the close of this bar just here. We took a trade on the close of that bar just there, and we were short the market. So that's what we had just there. So it's a good thing to understand. And then, of course, let's see if we did have the retracement pullback we required. Money bar strategy specifies that there's certain percentages required minimum pullback on the Fibonacci. And so you can see here we reached 61.8% level. Again, how have I determined that? I've drawn from the last confirmed, because I'm going short, I've drawn from the last confirmed swing high to the last confirmed swing low, from that point to that point. Again, if you don't have an indicator, such as a smart money indicator, to actually help you to determine where these levels all are, then it's going to be very difficult to be consistent with Fibonacci. And your backtesting as well that you do will also be irrelevant as well, because you just won't be able to replicate or reproduce your results, really. So you do need to have a consistent methodology, and smart money indicator does give that to us. So that's an example just there. Now, I don't generally tend to use Fibonacci with counter trend trades. Why is that? The reason being because counter trend trades, when you're looking, automatically we know that they must have exceeded the 100% level, because counter trend means that they've broken the previous swing low in this case, and they must have exceeded automatically the previous swing low. So they must be more than 100% automatically. So when we were looking at this PSWB that we wanted to take a trade around, what we were looking for is this point from lowest point here to highest point just here. And you can see that that PSWB that we've drawn here has already exceeded 261.8%. It's a very overextended move here in the market on the Euro US dollar. And you can see that it's extended beyond Fibonacci 261.8, which is more than, of course, the minimum requirement for a money bar setup. So because this is counter trend, we already know it's greater than 100%. It must be because it's exceeded the last swing low to make it counter trend. And as a result of all of that, we don't really need to check Fibonacci if we're taking a counter trend trade. We know it's greater than 100% already. So that's pretty much it in terms of that topic. It's a good one to review. And I'm noticing quite a few questions are being asked in coaching about this. So I just wanted to To clarify this, of course, we are doing some one-to-one elite coaching with a certain number of trainee traders who are training up under the Vedanta Elite and the Live Trade Mentorship Advanced trading programs. So that's pretty much it in terms of my update here for the week, 25th May 2018. I look forward to speaking to you all very soon. Until the next time, stay disciplined, follow your plan, and trade like a master. Bye for now.